Good morning, this is Jeff Hildebrand for TBL Traders. Today's video is going to be on technicals and specifically bar charts and what they are. So I'll start off quickly with bar charts. There's a lot to go over. Specifically on the technical side, I usually trade candlestick charts. The candlestick chart you see on the right and the bar chart you see on the left. The difference between the two is that a bar chart will show, though it's hard to see on the video, an entry. It'll show three things as far as colors go. It'll show a green, which means it closed above the open, a red line, in this case on a daily, which will mean it closed below the open, and a yellow line, which means it closed at the same price as it opened. The difference between these two charts is that it's kind of hard to see, but if you look carefully, you can see the entry on the left, a little line that enters into the bar on the left, which is the opening price, and a line which leaves on the right, which is the closing price. Okay, so I'll try to zoom this in so that you see it a little better. There, you can see the line, the opening, in this case, the opening here, the little line on the left, and the line on the right, which is the closing price. I'll keep it in the bar chart for now. Well, no, I won't. I'm going to add the candlestick back. Yeah, I'm going to add the candlestick back so that I can show you one or two things about a candlestick chart that I find interesting. Quickly, a candlestick chart shows you these stop chasers. I see stop chasers a little easier with candlestick charts. There was one recently on the S&P 500. So let's just do an ES long-term futures contract for September. And I'm going to move that into a few days because these happen usually quickly. See these lines here? I see these very well with candlestick charts, and I have a harder time discerning them with bar charts. These are stop chasers, algorithms that chase out the stops that have been set at levels. So this one, there's obviously a lot of stops set at the high, and the algorithms just chase those stops all the way up to about here. Same thing happened on the recent high yesterday, or Friday. So anyways, let me go back to what we were talking about before, technical setups. My first suggestion is that you keep it simple. Yeah, keep it simple. This is rarely the case when you read books about technical setups. They try to make things very, very complicated. Complicated technical trades are complicated, and personally I tend to believe in them less than I do very simple technical setups. There are literally hundreds of technical patterns. Many of them were invented to sell books or teach a course. So stick with the most simple, and that's it. The most popular technical pattern, the most popular technical pattern, is a trend. They don't usually speak about it as that, but a trend is a technical pattern, and that's the most simple, basic, and probably trusted technical pattern there are. The next would be flags or head and shoulders, both in a case of flags, bull and bear flags, head and shoulders, inverse head and shoulders. I'll show you a head and shoulders quickly. I have one up on the screen. After those basic technical patterns, you also have Elliott wave theory, which is very popular, and it's a collection of patterns, if you will. I like it for the reason that it helps you get a broader perspective on technical patterns than you would by looking at just one very simple technical pattern and trying to make a trade. It helps you take a step back. It can be very complicated, but it's worth learning it. Even if you don't trade it very much, it's worth reading about the basics of the Elliott wave theory. I think it's worth understanding. Okay, I'm going to look at one head and shoulders technical setup so you see what it is. And then I will show you where I identified it because it's an interesting place that you could also use. First of all, head and shoulders are seen often at market tops, inversed head and shoulders at market bottoms. The pattern is relatively simple. There's something called the left shoulder, a right shoulder, and a head, which is again obvious. In this case, we have a left shoulder here, a left shoulder here, a head, and a right shoulder here. And then some people would say this is the neckline. Okay, so your trade is here. That's a head and shoulder. Head and shoulders are rarely perfect and rarely this clean. Often they're tilted at an angle. The neckline will look like this. But these patterns are traded by everybody. Everybody sees them. Everybody asks themselves, do I trade this pattern? What do I do when it breaks the neckline? When it comes up to support on the neckline? And this is a downward trending head and shoulders. It's supposedly calling a market top in this stock. On Finviz. Finviz I like. It's a great site. Again, like TradingView, I use to sort of identify things and then explore them for myself. That was, where does anybody see it? Here it is. Caesar's acquisition was identified here on Finviz. Finviz allows you to search lots of different signals, they call them, or patterns, or setups. Double tops, double bottoms, multiple tops, head and shoulders as you see here. It's a good site to get an idea, to start learning about technical patterns so that you can see what they are. So that's about it. That's the bar charts here, candlesticks here, a technical setup here, the head and shoulders. So good luck with your trading. If you have any questions, let me know. Oh, I'm sorry. One last thing. The head and shoulders can be inversed as well. When I said you could see it at market bottoms, it's the reverse of this. It's upside down. The head would be considered, it's just flip this thing upside down, and that's what you have. Anyways, okay, thanks again. If you have any questions, let me know.